Hey everyone, it is Jay Soloff from InvestorsAlley.com, and this is our options trade of the week. So I am here at MarketChameleon.com looking at the unusual options volume screener. This is my favorite place to look at unusual options volume activity, and what I normally do is pull up the list and then sort it by volume to see what some of the big names are doing, such as Tesla, SMH is a popular semiconductor ETF. There was some pretty positive news on semiconductors, AMD in particular. So that doesn't surprise me. 97% calls there, a lot of bullish activity. Some other gold, we have Brazil, Russia, a lot of ETF action. So when we come down to Micron, and Micron had earnings this past week that were solid. The stock price has been running up ahead of these earnings, but the activity you can see is still mostly bullish, a lot more calls than puts. So let's take a closer look at that. All right, so we are here at the options chain, and I'm going to bring up the list of trades today. So we go down to trades. And once again, I'm going to sort it by quantity because I want to see what the big trades were. That's generally the stuff, the block trades are the things that are being done by institutions or funds or, the so-called smart money. A lot of this, when you see some of these very low price things, particularly when it's on expiration day, a lot of those are closing trades. Some interesting January 2021 and March 2020. It's kind of spread here. All right, so this one's interesting. June 2020, it's the 50 put. The stock is at 55. Now, this shows it as stock contingent, means that there's a stock trade that is part of it. Now, normally you'll see something like that with a covered call where you're buying stock and you're selling calls. This one, however, since it's on the ask, it looks like buying puts and it's stock contingent. So what's that? That's most likely a married put where you're buying the stock and you're buying the put at the same time. Essentially, you're buying a hedged position. It is bullish because you are buying the stock, and that is where you're looking to make your money. However, you're like, well, someone spent $495,000 on these puts. Well, they've just bought 150,000 shares at 55.41 here. So they spent a bunch of money on the stock. So spending $500,000 to hedge against downside risk is not it's not the sort of thing that would seem unreasonable when you're buying a stock position. So this is this hedge goes through June 19th, so it's about a 6-month hedge. Now, theoretically, they could roll it out if they want to keep the shares on, or maybe they're only concerned with it over the first 6 months. But, most likely, again, what's going on here is someone's buying a lot of stock and they're hedging it, and they're just packaging it all in one trade. So I would look at this as a very bullish trade. And even though this is actually a put trade, most of the bullish activity, happens on the call side, which is why, when you look at that huge call to put ratio, a lot of that is bullish in calls, but this is actually, I would consider this a bullish trade even though you're buying puts. So interesting trade, something you could easily do. You don't have to do it all at once as like a married put. You could, but you could just buy the shares and buy the put separately. Very easy to do in your own account. You can buy short term over a couple of weeks or a couple months to protect against change in earnings or just a more tumultuous period in the market. So buying puts is a very simple, not always the most cost effective, but a very simple way to hedge downside risk if you're long a bunch of shares. So that's an interesting thing that happened here in Micron. I talk all about all these different sorts of strategies in my education products and in my service, Option Floor Trader Pro, $49 per year service, where I do a lot of call and put buying and do a lot of teaching about options. So you can get that. There's a link on this site. And again, it's just $49 a year to check that out.